three specific areas that we focus on in this report. The first one is looking at what does long-term investing actually mean today, who are the long-term providers of capital in markets, and what constrains them from making long-term investments. The second area we're looking at is what are the benefits to society at large, to corporations and to investors themselves being long-term. And the third area that we want to look at is how has the financial crisis impacted those who make long-term investments. If you think about the last 3 years, the near meltdown of the global financial system and the following economic crisis have clearly been the defining issue. And they've been front and center for us at the World Economic Forum, and have prompted a number of fundamental questions concerning the origin, the nature, and implications of this crisis. One of the key questions is if short-term objectives have increasingly outweighed a focus on long-term value creation and long-term growth. And there's been increasing evidence that this is the case. On the financial side, we've seen ever-decreasing stock holding periods. In the 1980s, for example, the average holding period at the New York Stock Exchange was 5 years. Today, it's roughly 5 months. And also, we've seen a massive increase in high-frequency computer trading. On the corporate side, we've seen ever-dropping CEO tenures, and I think many would argue that there's a disproportionate focus on quarterly earnings versus long-term objectives. The question is, how do you address this trend? And the most effective way to address it is really to start with the asset owners who provide capital to the markets. And this report is specifically looking at the issues that are exactly related to these asset owners and providers of capital. So why do we think that the capacity for long-term investment is actually decreasing? When we look at the market of professional investors, it's roughly 67 trillion, and only half of that is roughly held by long-term institutional investors that we think have the capacity to invest for the long term. And due to certain external, internal constraints that we identify in the report, only 25% of those assets can be invested for the long term. And we think that those constraints in particular groups are even increasing. So as a result, what we see is that we see the capacity decreasing at a time where it would be more important for the world than ever to have enough long-term capital available, and we think that should concern everyone. So we think this report is equally relevant to policymakers and regulators as it is to investors themselves, particularly institutional investors. I think from our perspective, the most important point is that the report not only contains analysis of the problem of the issues, but it really includes 6 very concrete recommendations or suggestions to both policymakers and institutional investors how to tackle the issues and how to ease some of the constraints on long-term investing and increase some of the benefits that flow from it.